my name, Henning. I'm one of the managing partners of the company agriportance. I also founded agriportance more than 4 years ago. Personally, I've got more background in the whole German agricultural and biogas industry. And yeah, in the next 20 minutes, I will talk a little bit about opportunities and risks in the European sustainable energy market, of course, with a focus on biomethane. First of all, let me give you a short introduction of our company. In the list of the participants, I saw that a lot of you are maybe new to agriportance, or there was no contact before. But what are we doing? So on the one side, we're having a wet compliance and gas shipping solution where we offer software and services for wet 2 and wet 3 related topics, and also the gas shipping, the biogas balancing. Why are we doing that? So 4 years ago, we saw that many biogas producers in Germany who were switching from biogas to biomethane had many questions regarding this wet 2, GHG balances, mass balances, and everything which is going along with this, also NABISI, DINA Biogas Register. And therefore, we developed this software and service solution where currently 70 biomethane and bio-LNG producers are doing their whole monthly and quarterly sustainability management with us, and partially also the gas shipping. Furthermore, we're also having a matchmaking service where we connect producers and off-takers of biomethane nearly all over Europe with a focus on unsubsidized volumes. So biomethane producers who didn't get a feed-in tariff for the biomethane, and biomethane which is going then into the fuel sector, to CHP plants, to industrial clients, and so on. But let me make a deep dive into European biomethane trading. There, I brought this slide where I will show a little bit the opportunities, but also the risks and challenges we currently see in our daily work. So on the one side, opportunities like growth levers in a dynamic European market, both for producers but also for traders. On the one side, we see that we have a policy-driven growth correlated with the RED 3 and also national mandates, which can make you like a little bit bullish, especially for the years 2027, 2028, 2029, where we see different blend quotas, different greenhouse gas quotas evolving all over Europe, different subsidy schemes, but also, for instance, something like the EEG for biomethane CHP plants in Germany. Also, what we see coming together with this policy-driven growth is like a shift towards negative CIs. So biomethane from waste with the CO2 liquefaction, where it's then like -20, -30, or agricultural biomethane from manure. We see a growing demand in Germany, which is like the classical market for this negative CI, but also in markets like the Netherlands, who are now shifting their HBE quota, so their quota from the fuel sector also into a quota which is more CI related from April 2026, but also with their so-called Beimengenverpflichtung, so like a blending obligation, which may come from January 2027, which now also allows biomethane, for instance, from Spain or Germany, and also is targeting this biomethane with -20, -30, or even -100 or lower. But also we see other markets there, like Great Britain or Spain, who are also moving partially in the direction of paying more money for a low CI score. And that's the reason why we see increasing premiums for negative CI biomethane, which is somehow good and which you have to keep in mind by structuring your trading portfolio or also structuring your biogas or biomethane plant. Behind of that, we also see new use cases emerging. On the one side, the aviation sector, but also the maritime sector. I think big spotlight is there on the FuelEU Maritime, where currently a lot demand and pulling effects are coming from, especially for subsidized manure, but we also see that first maritime companies are buying unsubsidized manure because it's more secure for them, and also something green hydrogen from biomethane or raw biogas. So this also maybe a use case which may occur in the next years. Also, somehow the digitalization and traceability is more coming into the market with software tools and automation, which simplify this whole GHG tracking, compliance, and also verification, which is a good opportunity in this evolving industry also to take part of a good digitalization of your own processes. On the one side, on the other side, like the whole risk and challenges we currently see, we see a high regulatory fragmentation. We So that what we also saw in the last years, we're having country-specific rules and also different implementation timelines, which makes it somehow important as maybe also small or mid-sized company to take really part in this whole European framework, while you're having totally different laws in France than compared to the Netherlands, and it's not really clear whether your produced biomethane in Germany can be exported to this country or that, because of this fragmentation and the whole complexity which is going with this. And this is, of course, a risk and also a challenge for biomethane traders, but also biomethane producers. Yeah, the second risk we see is this whole volatile pricing and demand, where Nick from Argus will also show you a few slides where he also shows how these prices are fluctuating and going up and down. For those of you who are like quite long now in the biomethane market, know that quite well. So we see a lot of spot price fluctuations, overcapacity risk, but also dependency on political frameworks, which make this price volatile, and also somehow, because of this whole over-the-counter business, quite intransparent and also not easy to really understand. Yeah, certification complexity, which is even going deeper with the Red 3. Multi-country trade increases certification burdens and also the whole regulatory shifts. Example given is like the double auditing, so that you're having to do like a red cert, ICC certification, but also certification regarding for the DENA biogas register, and also the document harmonization is not well. Yeah, transaction and verification, so the whole mass balance, GHG reporting, sustainability checks are having a high risk when not done properly. Yeah, so maybe a small comment here. What we see with this risk and opportunities, we see with the right partners, digital tools, and flexible trading strategies, risk can be turned into scalable opportunities. It's quite important to understand that there are a lot of risk which you have to be aware of, and also maybe your manager have to be aware of. But of course, there are ways to go into the right direction. And this is something which I want to present in the next slides, where I will give you a small overview. First of all, this whole Red Cert ICC certification, so going into this Red 2, Red 3 market is quite important, and we see that getting your biomethane sustainable, so having a sustainability certification in some of these schemes, for instance, SURE, Red Cert ISCC, or 2BS, Better Biomass, to name a few, is quite important. And even with the Red 3, it's getting more and more important. For instance, in Great Britain, we see that 1 out of 2 biomethane plants are already having a sustainability certification, while in Germany it's nearly 2 out of 3 having this sustainability certification, and you see really a price premium by having this sustainability certification instead of just injecting gas and then selling it into the market. So there we see this shift more and more, not only in Great Britain and Germany, but also in other markets, because you just get more money and better marketing opportunities by having one of these sustainability certifications. With the sustainability certification, also this mass balance approach goes along, where we see in the market quite risky things happening, where this mass balance approach, in our opinion, or also in the opinion of the European Commission and also Red Cert and ISCC, is not done properly, and also there are then risks that the end consumer or the trader or the producer, by doing these mistakes, cannot ensure the certification, and therefore, there is a loss of money and therefore a risk. But also, first of all, what is a mass balance? It's like the traceability of materials through every step of the process. The mass balance is a prerequisite for certification. The point of origin processing companies and suppliers must draw up a mass balance. So that's quite important from the point of origin until really the end usage for industry clients, CNG station. There has to be every step documented. And like three things are important: the bond between information like origin, type, and respective products, the ensuring of the sustainability of raw materials, intermediate and end products, and the whole credibility throughout the entire supply chain and manufacturing chain is important. When you have any further questions here, we can also speak after this webinar, or just write us an email to go a little bit deep dive what we see as a proper mass balance approach. Also, when Nick is showing the prices later, you will see that this GHG value is getting more and more of importance. What I have here is like really the framework for this GHG value calculation. I think most of you are quite aware of it, but let me explain like the principles. So what you're looking when you look at biomethane, bio-LNG, and this whole GHG calculation after the WET 2 and WET 3, you see that there is a total emission from the use of fuel. So this is like the -100, the +10, +30 you may have heard of, gram CO2 equivalent per megajoule. And this is calculated by adding different emission factors like the emissions from the extraction or cultivation of raw materials by putting maize silage, grass silage into the digester. But also, for instance, the emissions from processing, emissions from transport and distribution. So every time you use electricity or transport something, EP and ETD have to be estimated. But also a good thing with this ESCA, ECCS, ECCR, you can even reduce your emission and maybe also get a negative CI biomethane. For instance, ECCS, emission saving from CO2 capture and geological storage, by using the CO2, which is more or less a product of your biomethane upgrading and stored underground, or ESCR, widely used when you put manure into the digester, also to reduce the emissions here. And when you have done the mass balance, the certification, everything in a proper way, what we always have a question is how can like transfers look like in the markets. So here, and really more a model-wise overview, what we see with our clients, on the one side, of course, you have like a deal, but also it has to be proved that it's sustainable, and also the GOO, guarantee of origin, has to be proved. You also have some molecule which has to be handled, and also like somehow the gas shipping, the balancing group management has to be handled when it's needed by the off-taker. Of course, for the deal, in most cases, what we see in the market, there's somehow a term sheet which is signed, a proposal which is accepted from one or both sides, and then a contract is drawn up, maybe for 3 months, maybe for 1 year. The second important thing, and there we're having a lot of questions, somehow the Pais and GOO has to be handled. On the next slide, I will also show a little bit how this NABISI and DENA registry is working, but also UDB, Energienet, Vertice are some more of these registries which are important. Of course, a molecule from the biogas upgrading goes into the natural gas grid and then to the consumer. This can be handled by such a balancing group management. In Germany, the Biogasbilanzkreis, or like somehow a different other gas balance sheet, which is then coming from the entry point over the virtual trading point to the exit point, maybe a CHP plant, maybe a CNG station, where it's then used and transported via the gas grid. But on the next slide, I would make more a deep dive into this proof management. There are also for many European clients who are exporting their biomethane or their certificates to Germany or want to enter the German market. There's always this questions whether I should use NABISI or the DENA biogas registry. So Nabisi is more like for this whole post management, and DENA is more, can see it more or less as a GO registry. But for some markets, you need both. For other markets, you only need one of these two. I would present these different markets. And you see here, when it's yellow, like for instance, here it's a BIMSCH, you would use Nabisi. When it's green, it's DENA biogas registry. And when it's uh, yellow and green, you would have to need both. For instance, for the BIMSCH, this is a whole quota market. So when you would export biomethane to Germany for the CNG or LNG market, you would have to use Nabisi. The DENA biogas registry would not be requested. In the EEG, so like a gas power plant, a CHP plant who is using biomethane, you would either use the DENA biogas registry when it's below 2 megawatt hour, the CHP plant when it's above 2 megawatt hour, you have to use Nabisi and the DENA biogas register currently. For the GEG, the Gebäudeenergiegesetz, you would have to need the DENA biogas registry. When your client, like for instance a Stadtwerk, also want to have this BEHG, the Brennstoffemissionshandelsgesetz exemption, so the CO2 tax exemption in Germany, they would also ask for Nabisi. Which is also shown here a little bit in the BEHG, where you would either need Nabisi, or when it's an EEG system, you would need the DENA biogas register, or also both of it. TEHG, this is like the UTS. It's depending on the pathway. For the energy utilization, it's Nabisi, while for the material utilization, for instance, by producing nitrogen fertilizer, you would have this material utilization. But depending on the market and also depending on your client, there are also different ways to go. It's important for you to be really aware of it. What we saw in the market, that both sides were not really aware of what's going on, and then they transferred it not in a proper way. And therefore, yeah, maybe in the EEG there something went wrong with the subsidy, which was the Stadtwerk wanted to gain. One other things where we have many questions is like the whole biogas balancing group management. So how gas shipping looks like in Germany. We have a whole workshop which is going along with this. In this case, for this webinar, I've got only 2 slides. But it's important to understand that German producers, German traders are quite active in this balancing group management, which is also a proper mass balance approach to transfer not only the POS and the GEO, but also the gas itself. What you see here is the portfolio of a biogas producer. On the one side, he has quite a stable biogas production, which is here in yellow, with something 110, 20, 130, 140,000 kilowatt hour per day. But he has somehow an unstable so he's selling his biomethane to a CHP or to a gas power plant, which is maybe staying in the Ruhrgebiet in Munich. And there you see the exit is quite unstable. Everyone who's aware of power balancing group or gas balancing group would now say this does not work. But in this biogas balancing group, you have much more flexibilities. You do not have to be at zero on a daily base. It's more or less at the end of the year, you have to be positive in a flexibility frame, but even within the year, you can get negative, which I have shown here. Like a flexibility portfolio for this biogas balancing group. What you have here is like the entry and exit accumulated. So this producer started quite positive in January, while he was producing more than he was selling out of his balancing group. You see here an increase of the amount of biomethane he has in his balancing group, and you can imagine a balancing group is like a bank account. So he was putting biomethane into this balancing group, like putting money on a bank account. while in the same time he's also extracting biomethane from his balancing group or his bank account. In January and February, it's more biomethane is going in than out, while starting in March, maybe he got a new contract with a CNG station. More biomethane is going out than he's producing, and therefore his biomethane is going away. So more biomethane is going away. And here you see in July he's even getting negative, while then in July, August he's lifting up his production. And you see in the end of the year is ending positive. Here you see this orange and blue line. These are like the flexibility accounts, like similar to a bank account. You have like this dispo, so an amount of money where you can get negative. In this balancing group management, it's even a dispo in a positive way and in a negative way. And the producer or the trader is not allowed to go above this, then he would pay a penalty or buy flexibility from another producer or another trader. So this is really like how this gas balancing group is working. So, and this would be from my side for this small presentation to give you a good overview of opportunities and risk, and also to show you a little bit, because there we had a lot of questions regarding this biogas balancing group management and also Nabizi and Dena. So thanks a lot.
Okay, thank you very much, Henning, for your presentation. If you have any questions, perhaps your questions will be answered in the next presentation. So maybe wait a few minutes before you ask your question so we have a better overview. And yes, now I would hand over to Nick for the next presentation.
Perfect. So hi, everybody, and thank you, Henning. Thank you, Inga, for this kind introduction, and thanks, agriportance in general, for the invitation so that I have the opportunity to talk about a really, really exciting topic today. I want to talk about the European biomethane markets. I'm Nick Pais dos Santos. I'm Business Development Manager at Argus Medius for our European biomethane service. And as I said, I want to talk about the European biomethane landscape. And what I want to do is I want to explain and show you the different use cases of biomethane in Europe. Because if we have different use cases for biomethane, there are many different biomethane markets. We have the voluntary market, we have the mandatory market, with the marine fuel market and the road fuel market. But the challenge and the opportunities, actually, it is always the biomethane. And this means that the dynamic in one biomethane market can actually drastically impact the price development of biomethane certificates in another market. So this is really a challenge and opportunity because the market is kind of opaque and there's a lot of complexity due to this interplay of the different markets and this cross-market dynamics. So my agenda for today is I want to present you the different use cases and the different markets. Then I want to show you how our data at Argus, or the price information, can help you to identify the different values of biomethane in those different markets. And then I want to show you with 3 examples how this different cross-market dynamics happened and had been in the past. So I will show you the historical data of biomethane certificates in 2025 and what really have driven the price development in those specific markets and what have been the reasons. And then I can also show you how our data at Argus can help you to, in some way, navigate through this really complicated biomethane landscape. As Henning and Inga already said, so after this presentation, we will have a Q&A session. But of course, if you have an interest in a deeper discussion with me or with Argus, please feel free to reach out on LinkedIn or just write an email. And I think this presentation is actually a really good follow-up because I would talk about the carbon intensity score. I would talk about certifications, so something Henning already discussed, but I have this price reporting angle. So I will show the factors Henning already presented from a pricing perspective. Of course, I have to start with introducing Argus Media. So who are we? What are we doing? So Argus Media is a price reporting agency that was founded in 1970. And what we're basically doing is we are assessing and publishing price information for commodities that are traded on the spot market. And we are not only focusing, for example, on Germany, we are active around the world because there's so many different commodities with a lot of liquidity. And this is why we are, for example, also assessing prices for fertilizers in South America And this is why we have an office in Sao Paulo, for example, which has price for electricity, for chemicals and stuff like this. But we also, of course, assess prices for European biomethane. This is why I'm here. And we assess prices successfully for biofuels as well. So we assess prices for biodiesel, for HVO, for German greenhouse gas certificates, for Dutch HBEs and UK RTFCs. So with our information, we can understand all these different cross-market dynamics. We're not just a price reporting agency in this regard, we also have a department for consulting. So we have a consulting services. So if you're interested in supply and demand forecast for biomethane from 2025 until 2040, we are also able to give you this information with our consulting team. But we also host conferences. So in October, we will host our global biofuel conference in London. This will be again about biofuels, but also about biomethane certificates. In November, we will host a road transportation fuel conference in Munich. Will be about the GG quota in Germany, will be about HBEs, biomethane, bio-CNG, and LNG. So if you're wondering what you can do with our data, so we assess the prices that reflect the spot market as an independent company. And you can use the data, for example, as a biomethane producer to calculate the production costs. You can use our data to calculate your margins. But you can also use our data to use it as an independent reference price in the supply contracts. So you are basically safe to price volatility. So you have some price security using our data. So if you're looking at biomethane, this is our current biomethane portfolio. So Henning already said the biomethane markets are really complicated, and it is all about the granularity and the fragmentation, because you can just not assess just one European, pan-European biomethane price. You need many prices actually, because there's so many markets. This is why we have biomethane certificates for the Dutch, Danish, and UK market, split up in different feedstocks, because again, the feedstock and the carbon intensity drive specific price developments. So we have crop and waste-based certificates in this regard. And also we have unsubsidized and subsidized prices. We've also prices for Germany, but this is really a road fuel German biomethane price. But this includes the physical part and also the green value. So the revenue you get if you're generating greenhouse gas certificates in Germany. And last but not least, we also assess bio-LNG prices for the bunker fuel market, to a price that can be used to meet the mandate under the FuelEU Maritime that Henning also mentioned in his presentation. So we already have many different prices because, again, many different use cases and, again, many different markets. So let's dive now into the real presentation. So I want to talk about the biomethane market. So I want to talk about the value and the market size. And this is again a follow-up to Henning, because the value is basically connected to the carbon intensity, it is connected to subsidy schemes, it is connected to the carbon intensity. So if you look at the different markets, in rough terms, we have the road fuel market, a marine fuel market, the industry sector, including the ETS scheme, and also the voluntary market, and then CHP that Henning also mentioned. And if you want to look, okay, where's the high value for the products, where's the high value for biomethane in those markets, we can normally say the road transportation fuel market is really interested in the premium biomethane product. So it's really interested in the biomethane that has low or negative carbon intensity values, because then you save more emissions, and then it's easier to meet the climate target set by Germany or the Netherlands. That's why we would say it's a high value market, but it's a small market, because if you look at the general biomethane and natural gas landscape, the road fuel market is really just a fraction, around 2% of total demand. So it's a small market, but high value. This might change due to the RED III draft in Germany and the Netherlands, because maybe if we be degraded from a high value to a medium value, this is really something we can discuss, because we got rid of the double counting in Germany, or likely we get rid of it. So it might change that the high value will switch to the medium value. The marine fuel market is a medium market from the size perspective and also from the value perspective. Value, again, you have a FuelEU Maritime target, but you really not need the manure-based negative CI product for the FuelEU Maritime. You're more looking at waste-based products with a CI of around 0 to 21. It's a medium-sized market. Many LNG vessels are operating in this market. So this is why it's medium-sized. And if you're looking at the industry sector, so under ETS and voluntary, those are low value markets because they, in easy terms, and so to speak, they just care about the biomethane certificate. They do not really care about manure. They just want to substitute the natural gas with biomethane. So they're looking, okay, I need subsidies. I need, for example, crop-based biomethane certificates because they are cheaper compared to manure-based biomethane certificates. This is why I would say it's low value, but the market in both sectors are huge. So if you're looking under the ETS, and there's a company that is substituting the natural gas with biomethane. Biomethane has 0 emissions, so the consequence is that they have to buy less EAC, so less emission certificates under the ETS scheme. So biomethane can really be an incentive to reduce the cost under the ETS. So that's a huge, huge market. And then we have CHP, but this is not really the focus for today. And if you want to draw it on the graph, it would look something like this. So road market, low demand, but really high value in contrast to the industry sector. But I'm from a PIA, so I want to talk about prices now. So the question is, what drives biomethane prices in general? And this is again something Henning already said. So we have to look at the financial support. We, of course, and this is somewhat obvious, if you are able to buy a subsidized biomethane certificate, you will pay a discount compared to an unsubsidized biomethane certificate. Or if you want to buy a manure-based biomethane that has really negative and low carbon intensity, you're paying a premium compared to a crop-based biomethane that has a CI score of 28, for example. Then if you are in a voluntary market, you're looking, for example, at uncertified biomethane because you do not really need certifications from, like Henning said, ICC or Red Cert to meet your corporate policies. But if you're operating in mandated markets, under the Red 3, for example, you need the certification. And the vintage, of course. This year's biomethane is priced at a discount compared to next year's biomethane. So what I want to show you now is a stack of prices. I want to show you the different price elements that are important for the different markets. So this are all based on the information we assess at Argus. With this information, you can basically identify the value of your product. So for example, let's imagine you're a company that already has the gas and you want now to make your company, due to your policies, greener. So you're interested in buying biomethane to substitute your natural gas, for example. So what you're now looking is, you're looking at a, so to speak, cheap biomethane. So it's really feasible to reduce the emissions of your company. So what you're doing is you're looking at Dutch, crop-based, subsidized, uncertified biomethane certificates, and you would pay an additional premium of around 10 euros per megawatt hour to get this certificate. So this would be then the voluntary market. But maybe you are still in the voluntary market, but you care about certification because you just want to prove that this is produced from a certified company or facility. This might be important for your policy. This is why you would look then at the certified product. And maybe you do care about the carbon intensity because due to corporate policy regulations, the amount of savings is important. So you would look then at Dutch waste-based subsidized certified biomethane certificates. So you pay an additional 12 euros per megawatt hour to get this type of certificate. Or also, you could buy this certificate if you're obligated under the FuelEU Maritime, because with the current consensus, I know that's debatable, you can use subsidized biomethane to meet the FuelEU Maritime target. So if you're a ship operator or ship owner and you want to reduce your emissions, you could use this price and this product and commodity as well. Then maybe you are obligated under the road fuel market, or you have an obligation as a road fuel market operator. Then you cannot use subsidized prices. And this is why you would be interested in unsubsidized waste-based certified biomethane certificates. Or you're obligated under FuelEU Maritime, but think this double counter with subsidy schemes and FuelEU Maritime doesn't make sense for me. So I want to be on the safe side and buy the unsubsidized product. Then you would buy this as well. So then you would pay this additional premium on the stack. Or last but not least, maybe you are sitting in Germany or you want to export to Germany. Germany is really interested in the negative CI product. So Germany wants to look at the manure-based product with a CI of -100. It has to be certified again because it's a mandated product then, and it has to be unsubsidized. Then you would pay an additional premium of 36 euros per megawatt hour to get your product. So as you can see, again, many different use cases means many different markets, and this means there's a need for different price assessments in order to identify the value actually for the specific product. And this is what I wanted to show with this price stack. Now, as spoiled in the beginning, I want to give you now 3 examples and show you the connection and the interplay and cross-market dynamics between the biomethane certificate that can be either used in the voluntary market or in the mandatory market. And I want to start with the subsidized price or the price development for subsidized biomethane certificates. So what we're looking at now will be the Dutch and Danish subsidized waste-based biomethane certificates that are certified into 2025. And the price development was quite interesting. It was a bullish market most of the time in 2025 for both prices. So they're both waste-based, they're both certified. The only difference is one is Danish, one is Dutch. And then we want to compare it with UK prices, also subsidized, also waste-based, but uncertified. The only distinction, the stark distinction between those prices is the certification. So you would say the UK one is or can be used in the voluntary sector, and the other one can be used in the voluntary sector, but also in the mandated market. What's the reason? And this is really interesting. The price increase for Dutch and Danish subsidized waste biomethane is due to the new demand for bio-LNG under the fuel maritime. So companies that are operating in the marine fuel market identified biomethane as a really great feasible option to reduce emissions and to meet the fuel maritime target. And because under current legislature and consensus, you can actually use the subsidized product, so the cheaper, so to speak, product to meet those targets. So this fresh demand actually increased the price for subsidized waste-based biomethane, a product that is normally not used under mandated markets. So we have the first example how a mandated market had a huge influence on the subsidized biomethane market actually. Then we see the UK market, an uncertified product that's normally used in the voluntary market, but the price is bearish. And the reason therefore is that especially from Germany, but also from the Netherlands, exports had been quite huge because there was an oversupply and they dumped, so to speak, the product into the UK market. And if you have a general oversupply of biomethane in the UK, all biomethane prices, of course, decrease in some regard. Also, that's one important factor, and I want to explain in the next slide, that renewable energy certificates in the Dutch and German market were comparatively low to the RTFC market in the UK. This is the first example how different price dynamics can impact prices in another market, basically. Next example is I switch now from the subsidized market to the unsubsidized one. So I want to look at Dutch unsubsidized waste-based biomethane certificate that are certified. That's on the left. And I want to look at red biomethane price with a CI of +10. So it's also a waste-based product. The Dutch has a CI of around 0 to 21. The German one has a fixed one, it's +10. Prices for the German are on the right because there you have the gas lag as well because you cannot really disconnect it. So what happened in 2025 for the unsubsidized market? It's a complicated answer, to be honest. So the first one is that the German government said at the end of last year that obligated companies under the greenhouse gas quota are not allowed to use the carryover of greenhouse gas certificates for the compliance years 2025 and 2026. So broadly spoken, so if you're a company and you have to reduce the emissions of your fossil fuels in Germany, you can buy greenhouse gas certificates to meet those energy targets. And if you exceed those targets, you can use your overcompliance for the years after in normal circumstances. And Germany said, no, you cannot do it. You can only use it from 2024 until 2027. So you have to skip 2025 and 2026. What happened now that many biomethane producers said, okay, I expect the value of my biomethane to be higher in 2025 compared to 2024. So they try to push their volumes from 2024 to 2025, and this led to a huge oversupply of biomethane. In addition, the obligated companies who normally need a lot of greenhouse gas certificates said, I step back and wait until I've been really active on the spot market. So the demand was really low. They said, I have to do my calculations and my homework before I enter the spot market. So oversupply met low demand, and this crushed the biomethane market in Germany even further. We have a similar situation in the Dutch market. The HBEs, so the Dutch certificates, were at the low levels, while they were at high levels compared, at least, in the UK market. So this means that there was not really an interest for unsubsidized biomethane in the Dutch market. This put additional pressure on the price in the Dutch market. And last but not least, especially the Netherlands and Germany had been countries with a lot of rumors around RED III. And both countries actually published last month drafts for the implementation of RED III. And this you can see at the end of the graph for the Dutch prices. It and push the prices slightly higher because there's an expectation that the demand for biomethane and certificates will be higher in the Dutch market soon. And there you can see it dampened due to the uncertainty, but now the draft law was published, so it increased the price quite slightly, and we cannot see it yet for the CI10 prices in Germany. My last example will be about the GHG certificates, GHG quote, and biomethane in Germany. Again, biomethane in Germany is quite a huge topic. It's a huge market. So that's why I want to focus on, with my last example, on the correlation between greenhouse gas certificates and biomethane in Germany. And this is really interesting because normally would say that there is a huge one-to-one correlation between greenhouse gas prices on one hand and biomethane prices on the other hand. Because if you look at the price components of biomethane in Germany and the road fuel market, the value actually of biomethane is the revenue of the greenhouse gas certificates. So normally would say if the price for greenhouse gas certificates increases by X, biomethane prices would jump by X as well. But this is not the case in 2025 because they are different markets still. Nevertheless, of course, there are some influence that push up biomethane prices or pull them down too. So it's not, they're disconnected sometimes, but they are connected sometimes as well. So let's look at this really sad price development of biomethane in 2025. So it was a bearish market until May 2025 and now recovers slightly. And let's look at the greenhouse gas certificate prices for double counting advanced certificates. So those are certificates you generate if you are bringing biomethane into circulation. And you see in the beginning, they have a really comparable price development. So both are more or less like bearish, I would say. The reason for biomethane is again the oversupply from 2024 and the low demand from the obligated companies. This is why we have this trend that's really going downwards all the time until May. But we have a development for greenhouse gas certificates in early April that was not translated to the biomethane price because we had some problems. There was some problem with the EU and ISCC certification for waste-based biofuels, and there was rumor that they will get, so to speak, rid of the ICC certificates for waste-based biofuels. And this obviously triggers a lot of reaction, and there was some uncertainty if this will lead to a scarcity. Furthermore, in the trading hub AIA, there was a scarcity for used cooking oil, so the blending costs for biofuels increased slightly, and this pushed the prices for greenhouse gas certificates up. But this was not translated in biomethane prices. So there's disconnection because, after all, they are different markets. Then, end of June, we had the publication of the RED III draft. This, of course, skyrocketed the price for greenhouse gas certificates because it is expected that the demand will increase for certificates soon quite rapidly. They want to get rid of the double counting, so companies are now, of course, quite interested to buy certificates, double count certificates, as long as it is possible. So this skyrocketed, of course, the price for greenhouse gas certificates. And you can see that also the price for biomethane recovered as well, but not the same factor, so to speak, as the greenhouse gas certificate. So again, a correlation, yes, but not a 100% one-to-one correlation. And this is my last example. So I hope I could show you that there are many different price information that is necessary for the different markets for biomethane, because we have those different markets due to the different use cases. And it's sometimes really challenging to navigate through this biomethane landscape, but having access to different price information can help people to navigate more smoothly through this landscape. Last slide is just showing again our portfolio. So our price information is part of our license, that is part of our report. So we have different reports that entail the different prices. For example, our Argus Biofuels report covers biomethane certificate prices, Dutch renewable energy certificate price, HBEs, RTFCs, European HVO prices, so everything that is happening in the biofuel space. But what Argus also doing is writing news and analysis pieces on those specific commodities, so you're always informed what's happening currently in the market. And of course, we have the consulting team doing the forecast, doing the outlook, so everything you need to know about the future. So thank you very much for the attention. I'm really curious to answer your questions.